Okay, here's problem 4-2B. This is off of the chapter 4 assignment number 2. So I'll just jump into it. Pat Okendo started her own consulting firm, Okendo Consulting, on May 1st, 2014. Trial balance at May 31st is shown on the next page. Actually, it's not the next page, it's right there below it. And then it has some other instructions in addition to those accounts listed on the trial balance. The chart of accounts for Okendo Consulting also contains the following accounts, and it gives you a list: accumulated depreciation on the equipment, salaries, wages payable, depreciation expense, insurance expense, utilities expense, and supplies expense. So those are all the accounts between the trial balance and that list that Okendo will use. Then it gives us a bunch of other data. This will be used in our adjusting entries. And then instructions. And the first instruction is to prepare the adjusting entries. Second instructions are to post the adjusting entries to ledger accounts using T accounts. And we'll start with the trial balance accounts as the beginning balances, and then we'll do any adjustments from there, and then to prepare an adjusted trial balance. So let's go ahead and jump into this. The first thing we have to do is do the adjustments. So they give us this other data, and that the other data is what we're going to base our adjustments on. Let me see if I can make this fit. Not quite, so I'm going to shrink it just a little. Hopefully you'll be able to see everything. All right, so number one is $1,000 of supplies have been used during the month. So if we've used up supplies, then the adjusting entry is going to be that we will claim those supplies as an expense as we use up an asset. We'll claim the expense. And we'll show the supplies asset decreasing. So again, expense, that's going to happen on the debit side because expenses increase on the debit side. And the supplies, which is an asset, is going to decrease on the credit side. If we want, we can make this all dollars. So there's our first entry. Number two, and by the way, these will all be May 31st as their date because adjusting entries always occur at the end of the period. Utility costs incurred but not paid are $300. So incurred means you have earned the expense, so to speak. You've used utilities, you just haven't paid for them yet. So again, it's going to be an expense, right? Because we don't worry about when we've paid the expense, we worry about when we've incurred the expense. And if we haven't yet paid it but are going to have to, that's an accounts payable. So the utility expense increases by $300, that's a debit, and the accounts payable decreases. I'm sorry, it increases by $300, it's a liability, so that will be a credit. The third one is our insurance policy. So tell us the insurance policy is for 3 years. It leaves us to assume a few things. It leaves us to assume that it was just issued this month, right? But if it's $3,600 for 3 years, then what we would do is to figure out how much of that policy to use up in 1 month, we would simply take the total cost of $3,600, divided by the number of months in 3 years, which is 36, and that gives us $100 per month. So each month they have this policy, they're going to recognize that they have incurred the expense or used up part of their prepaid insurance by doing an adjusting entry for $100 worth of insurance expense, and that will reduce the value of the asset prepaid insurance by $100. 4, $1,500 of the balance in the unearned revenue account remains unearned at the end of the month. So we can look at the account unearned revenue, or unearned service revenue, which has a $4,000 balance, and they're saying $1,500 of that balance it remains unearned, meaning that they used $2,500 worth during the month. Probably could have done that in your head, but you know. Anyway, so on 31 May, we are going to, you see the unearned service revenue has a balance of $4,000. So we're going to debit the unearned service revenue account, $2,500. That means we've now earned $2,500 worth of that revenue. And our service revenue earned account, we're going to credit $2,500. That's an increase to revenue. So this represents money that was paid to us in advance that created a liability called unearned service revenue. Then when we earned some of that revenue, we recorded it as an increase to the revenue earned and a decrease to the liability called unearned service revenue. All right, number 5. Assume May 31st is a Tuesday and employees are paid on Fridays. Oquendo Consulting has 2 employees that are paid $600 each for a 5-day work week. So if we pay $600 each, for a 5-day work week, if we take 600 and divide that by 5, that means we pay each person $120 per day. And we multiply that times 2 employees. So our cost or our expense is $240 per day. If we paid people on Friday and May 31st is a Tuesday, then we are going to owe 2 days worth of payroll to these people that we're not going to pay until the next payday. So we'll have to list that as a salary and wage expense because we've already incurred the expense because the people have worked, but we haven't yet paid it, so it's going to be a salary and wages payable. I'll walk through it one more time with my calculator just so you can see how I arrived by that number. If we pay our employees $600 per week for a 5-day work week, so if I divide that by 5, that means I'm going to pay my employees $120 per day. I have 2 employees, and I'm figuring the pay here for 2 days, a Monday and a Tuesday. So the amount is $480. So on 31 May, we're going to have salaries and wage expense, $480 because expenses increase on the debit side. And we're going to have salaries and wages payable. That's a liability account. They increase on the credit side. There's our adjusting entry. Number 6, equipment has a 5-year life with no salvage value and is being depreciated at $200 per month for 60 months. So for the month of May then, we're going to record a depreciation expense, $200. And they were nice to tell us. They could have just made us figure out, right? We could have taken the value of the equipment and divided that by its useful life, and we would have had to calculate the amount, but they told us for this problem because they're wonderful people. All right, and accumulated depreciation. Is our credit. Remember, depreciation expense is an expense account, increases on the debit side. Accumulated depreciation is a special account called a contra asset account that offsets the value of the asset equipment. The reason we don't just reduce this from the value of the asset like we would on, say, the prepaid insurance or the accounts payable is because those accounts are current assets, and so we expect to use them up during the period. As opposed to equipment, which is a long-term asset. So we always want to be able to keep track of what we paid for it. So we always list those accounts with their purchase price less any accumulated depreciation. All right, number 7. Invoices representing $1,500 of services performed during the month have not been recorded as of May 31st. So in essence, we have to record them. So this would be money that's owed to us, which is called accounts receivable of $1,500, and service revenue, because we've earned it, of 1,500. So there's our adjusting entries, and that was part 1 of the problem, or part A, I guess. Part B, oh no, it is part 1, sorry. Part B is post the adjusting entries into a ledger, or to the ledger accounts. Enter the totals from the trial balance as beginning balances. Use T accounts. Okay. So the best way for us to do this is just to create a new sheet here. And then what I'm going to do is I'm going to make a T account for every account, and that's going to take a few moments. I'll show you how to do a couple, and then I'll pause this so you don't have to watch me do the whole thing. And then we'll enter the amounts. So here's my cash account. The way I do this on Excel is I just, let's see, I merge and center that. I do a bottom line, and then I do like that. Also, I forgot, but I'll usually insert this so I can do the date over here. And then I do one of these for each of the accounts. Okay, so now I've got all my T accounts made. I did that while the video was paused. You didn't have to watch me set it up. It took me about 10 or 12 minutes to actually go through and make all of these. Now my next step is to enter the balances from the trial balance first into each account. So for example, the cash account, we'll put BAL for balance, and we'll have $7,500. Again, I'm going to go through and I'm going to tell Excel that all of these squares here, all of these cells should be dollars, and we don't need pennies. So that's what we'll do. You'll see that I've actually got 3 columns worth here. I've got all my assets here, all my liabilities and equity here, and then I've got my revenue and expenses in a 3rd column. I'm going to make it a little bigger so it's easier to see. All right, anyway, so I'm going to go through and do the balances. Supplies had a starting balance of 3,000. Prepaid insurance had a starting balance of 3,600. Equipment had a starting balance of 12,000. And I think you get the point here. Accumulated depreciation on the equipment, there was none to start. There were, accounts receivable. Whoops, I made a mistake there, didn't I? So accounts receivable had a balance of 3,000, and supplies had a balance of 2,500. No balance in the accumulated depreciation account. The accounts payable had a balance of 3,500. That's a credit balance. So we'll put it over on the credit side. Salaries and wages payable did not have a balance. Unearned service revenue did have a balance of 4,000. And common stock had a balance of 19,100. Always make sure you put things on the right side, debit or credit. And then service revenue had a credit balance of 7,500. Salary and wage expense had a debit balance of 4,000. And rent expense had a debit balance of 1,500. So that's all of the data that we already had, the beginning balances. All of these other accounts didn't have balances. Now we have to post our adjusting entries into the ledger accounts. Remember, we did the adjusting entries on the previous tab. In fact, I'm going to make this full screen just so it's a little easier to see right now. So I'll be working between the 2 tabs here. So I'm just going to look at each transaction. Supplies expense were debited 1,000 and supplies were credited 1,000. So I'll come over here and go to supplies expense and do a debit. Whoops. Oh, it still thinks those are dollars. My bad. Well, that's a hassle, but easily fixed. We will tell Excel that the format for these cells is going to be general, not dollars. All right, sorry about that. So on 31 May, we had a supply expense of $1,000 debit, and we credited our supplies account $1,000. And we have to do this for each transaction. The next one, utilities expense of $300 and accounts payable of $300. So utilities expense, $300, and accounts payable, credited $300. Next transaction, insurance expense, debit $100, prepaid insurance, credit $100. So insurance expense, debit $100, and prepaid insurance, credit $100, and so forth. Unearned revenue 25, service revenue 25. So unearned revenue. And service revenue. Whoops, I didn't tell it that that was general as well. Salary and wage expense, salary and wages payable 480. Salary and wage expense. And salaries and wages payable. Whoops, I did that wrong, didn't I? This should be salary and wage payable and the salary and wage expense. There's lots of things we could do to make this clearer, right? I could insert another anyway, you can do lots of things to make it look clearer. This is just, we use Excel all the time in accounting, all the time. And so if you're not comfortable with it, I suggest you take a course or do something to make sure you do get comfortable with it. All right, here we go. Depreciation expense 200, accumulated depreciation on the equipment 200. So depreciation expense and accumulated depreciation on the equipment. And finally, accounts receivable 1,500 and service revenue 1,500. Again, make sure you're doing things on the right side. So it's a debit to accounts receivable and a credit to service revenue. There's all my adjusting entries. Now I have to do an ending balance. In cases like cash here where I didn't have any additional entries, I just leave it the same. But in things like accounts payable, now I'm going to want to figure out a balance. So in this case, remember, I take my normal balance side, add it up, and subtract it from, subtract the opposite side. So for asset accounts, I'll expect my normal balance to be on my debit side. So I'll add up the debit side, it's 4,500. There's 0 on the opposite side, on the credit side. So that will be my total. You can use the auto sum feature in Excel if you want. And then I'm just going to use and that will represent my ending balance in the account. Here on supplies, I have a 2,500 on the debit side, 1,000 on the credit. So my new balance will be the debit minus the credit. And I go through and do this for each account. Prepaid insurance, the debit side minus the credit side. Equipment, no change there. Accumulated depreciation, there's a new balance, but we don't have to write it a second time. We know that the balance is 200. We could, if we want, we could bring it down here and put balance, if that would make us think it's a little clearer. Liability accounts. So now the normal balance for liability accounts on the credit side. So the balance in our accounts payable account is 3,800. Salaries and wages payable. Here for unearned revenue, we're going to have the credit side minus the debit side. So a new balance of 1,500. Service revenue, remember revenue accounts have a normal balance on the credit side. So that's what we would expect. And then expenses have a normal balance on the debit side. Rent expense, depreciation expense, insurance, utilities, supplies. So now we have balances for all of these accounts. All right, so we did the adjusting entries. That was here. Then we did the ledger accounts in the form of T accounts, which is what we just did here. And then the final thing we have to do is prepare an adjusted trial balance. So that's pretty doable for us because we have all the accounts right here. In essence, all we have to do is put them in order, in the same order that we have them in on our ledger, and then put the balances. Okay, so it'll look just like this trial balance, but it'll be an adjusted trial balance. So I'll set that up on a new tab. We'll call it Acctg Consulting Adjusted Trial Balance, May 31st, 2014. And then we'll have our accounts here. So let me just kind of center this across. Make it bigger so we can see it. And then we just drop our accounts in. So we can look back here and we can say, okay, cash account has a balance of 7,500. Just like that. Tell Excel that this should be dollars, and that we don't need the pennies. And now we just transfer each of those balances over. We can do it by hand or we can copy and paste them. So I can say accounts receivable. I just want to paste the value, not the formatting. And then I can go back and get the balance of 4,500. Don't know that it's much faster. But anyway, that's all we have to do. So I'll go ahead and do that. Supplies 1,500. It might be just as fast to type it. Prepaid insurance 3,500. Equipment 12,000. Accumulated depreciation on the equipment 200. And that's a credit balance. Make sure you have your balances in the right column. After a while, you just get really used to where they should be, and so it becomes pretty easy. Accounts payable, 3,800. Salaries and wages payable, 480. I'm sure at this point some of you are fast forwarding through this. Unearned service revenue, 1,500. And then common stock, 19,100. Service revenue, 11,500. Salary and wage expense, $4,480 debit. Rent expense, 1,500 debit. Depreciation expense, 200. Insurance, 100. Utilities, 300. And supplies. Expense, not supplies. That's 1,000. Then we have the moment of truth, where we will add up all of the debits. Comes up to 36,580. We'll do the same for all of the credits. And whoops, except that I did it too far. Another thing I can do is I can just use the fill tool, fill this column over, and that'll do the same formula in this column as is in this column, but for this one. So it transfers the formula over to the new column. Anyway, so now I can see that my debit and my credit balances, debit and credit sides balance each other. That's a good sign. And that was part 3, to create the adjusted trial balance. So now that's it for the whole problem. I will show you just very quickly. Often they will ask you to make an income statement and a statement of retained earnings and a balance sheet also once you've gotten to this point. And so I'm going to do that for you very quickly. So if I was going to make an income statement here, all I would do remember, an income statement covers a period, 1 through 31 May, not a day in time or a moment in time. All I would have to do to make an income statement is take these revenue and expense accounts, copy them, plug them in down here, and then do a little bit of formatting if I wanted to. This is why Excel is such a nice tool. Our total expense would just be the sum of all these expenses. And then our net income would equal our revenue minus our expense. And that's it. So once I've got my adjusted trial balance, it becomes very easy to create the financial statements. To do a balance sheet, we'll just do it over here for simplicity's sake. do balance sheet. Same idea. I'll do my assets, and then I'll just copy and paste my asset accounts. I may do a little bit of formatting. Like we'll say less accumulated depreciation. And then we'll do a net value here of 12,000 minus the depreciation. Of course, if I wanted to do a classified balance sheet, I would separate out the current assets right here from the non-current or long-term asset equipment. So I have all those options. Just wanted to show you how easy it is to use Excel to do this. So there's my total assets, liabilities, let's see, accounts payable, salaries and wages payable, unearned service revenue. And then stockholders' equity. I have my common stock. Whoops, I typed in common stock, didn't I? And my retained earnings. The retained earnings isn't given to me, so I would have to make a statement of retained earnings to figure it out. My statement of retained earnings would show my retained earnings at the beginning of the period, which were 0. Let's do the 0 here. And then my net income, which I got from my income statement, less dividends. I don't believe there were any dividends given. Gives us our retained earnings. At the end of the period. So that'd be our beginning retained earnings plus our net income minus our dividends. So our new retained earnings total would be the sum. And then it should work that our total liabilities plus equity should equal our total assets, right? If we did it right. So total liabilities plus our stockholders' equity, 28.8. So there's our balance sheet. So once we've done an adjusted trial balance, it becomes very easy to do an income statement, a statement of retained earnings, and a balance sheet. Anyway, I hope that was useful. I know I went a little beyond what the problem asked, but I think you'll be asked to do more in the future. So good luck with the problem, and let me know if you need any help.